All right, this is a different day. Everything looks bearish. Can't argue with that. We got a daily and a weekly. Let's take a look at the daily here. We see the previous day's high, this little doji kind of candle. We're below the previous day's high already before the bell opens. We're bearish. Okay, we got our yellow and white lines on the charts telling us where the weekly high is and where the daily high and low are, and that's some critical areas to pay attention to. But you can see everything's below the moving averages, which is the 200 moving average, important. Everything's below that on all time charts, whether you're using minute or tick charts, it doesn't matter. We're using tick charts here because they're smoother than minute charts, but they're about the same in terms of everything's perfectly the same when it comes to price and movement. All right, what are we looking for? We're looking for pullbacks. I was just about to pull the trigger on this trend line break here to the downside because we're going down. All right, and if it changes, that's fine. But if you want to go with the trend line moving average strategy, we're following the moving averages and we're looking for trend line breaks in that direction. Okay, yesterday or the previous day's trading day, we were below the moving averages here, and it was a choppy day, and we didn't know which way it was going to go because it was underneath. We remember that, and we couldn't decide, and it just kind of hung out, and it just played around. Today, it's really breaking that pivot level, and it looks like it's much, much lower. We got plenty of room on the daily chart for it to go down to the 20 moving average and even to the caution zone on the daily chart. Okay, we don't know what it's going to do. It could pull back just a little bit. It could hang out right here and reverse, but we have to call it like we see it. And right now, it's to the downside. So we're going to be looking for short trades until the character or structure change, and we will that will change when we notice that all the moving averages are back up over the moving averages like this right here. When everything's back up over the top, then we'll know that things are different. All right, so until then, right now, we are bearish and looking for bearish entries. Documenting this in real time is absolutely fantastic to try to figure out, what price is going to do. It just broke the trend line on the 250 tick chart going down. I'm going to see if it's what it's doing over here on the 1000 tick chart. I said I wasn't going to use the 250 by itself when it does something unless we get at least the 1000. I like two of these charts to agree in the trend line break these days. I kind of learned that the hard way, and it's pushing down past that trend line a little bit now. The problem is in this market lately, we've been seeing like V-shaped recoveries where it goes down real sharply and it comes right back up, and that's hard to trade. It really is. It doesn't give you a chance to really do much. I'm looking at the 2000 tick chart now to see that trend line break, to see if we have a chance to even do anything on it. It's not much of a trend line. A couple pintails up, and then it's coming down with a hard candle. Something's telling me to be very, very careful with this market right now. If it's meeting our criteria, why not try to take the trade, So let's do it.
Order filled.
I'll try to short that and see what happens here. Stop over the top.
Order submitted.
We're going to we'll be moving to break even here in a little bit. See if it goes back down. We're just, it broke the trend line. All the moving averages are going down in the same direction. I mean, I don't see why we can't give that a try. I mean, if it doesn't work, it's worth a try, is it not? It did break the trend line on the 2000. It did break it on the 1000 and the 250. I mean, I'll give it a try. I'm not sure if it's going to go all the way back down to the bottom, but maybe it's hit its maximum. Maybe I should break even now, try to break even. And or maybe I should take half profits, and just thank God for that. I don't want it to lose on this trade, so more likely I'll just come right down here to one tick below my break even. That way it's a win with one tick, even if it comes back. It looks like it's stalling out here. Maybe not, maybe not. Let's see if it goes down and hits my target. It's kind of slowing down. Watching the behavior of the candles and kind of keeping an eye on what's going on with that is helping us stay in the trade a little bit. It looks like it wants to keep going, but it sure is getting stuck right there. I'm thinking about closing the position.
Order filled.
I'm going to close the position probably right before it goes down. But, having a small win on your first trade is very, very psychologically, positive. So one trade, why did we take the trade? Because everything's down. And it broke the trend lines, but the problem is it did extend down quite a bit right here already. I didn't take the first one that I was looking for, and the second one here. This is the first one I was looking for, and I missed it. And so I figured I'd take the second one. And we've got to be careful because see, it's getting stuck. I don't like that. I mean, I really would like to see it continue down, but I'll take whatever I can get out of it. I'll take whatever I can get out of it because I need my first trade to be a winner, and it is. So thank God for that. Thank goodness I got out of that. I would have not made anything. I probably would have broke even on that. Too early to say if it would have been a loss for a full risk amount, but it just seemed like that price was slowing down. The action, the activity was slowing down, and so we made a right decision on that. And now, knowing that it is doing this behavior, we may be in a range. We see a lot of times price will move and it'll go into a range. That's possible. So we'll have to wait and see. But now that it's down here and it's not really going much lower at this point, we got to be very careful about trend line trading. If we had a sharp spike up or something, or wait until it pulls back about 50% of this drop down here on the Fibonacci, we will be able to see maybe that would be a good area. What else is it bumping into? Other resistance levels. We'll have to wait and see. But down here in the bottom, it seems like it's just not the right timing to take another trade. All right, I'm thinking about implementing another strategy here on our channel. We do multiple strategies, and we're always testing strategies. The trend line moving average strategy is our priority strategy, but we have an intraday swing strategy where we have a set dollar risk amount limit, and we can't go over that risk amount limit. And we add to our position and scale in at different levels, seeking to create a profit in the swing side. So let's start with selling right here.
Order filled.
And we're going to sell this because it's bearish. And the idea is that you're not trying to get in exactly perfectly. With an intraday swing, you're looking to add and build your position and buy at different levels so that you can make a move that's reasonable without breaking your dollar risk amount. So the dollar risk amount on this is anywhere from probably $100 to $400. I really don't want to go more than $400. So let's see experimentally if I can take trades and use this strategy, intraday swing strategy, and keep that goal of not losing more than $400, but making profits along the way. Now, if I were to make a profit suddenly and fast on just a small entry, I'd probably take it because there's no guarantee that it's going to actually work out. So any profit that we make, we probably could scalp and take. Let it pull back into the same zone and try it again. So it's kind of frees you up. It frees you up because you're taking small position sizes at the beginning. So this is 1 micro contract, and we're looking to add more to it. Now, since everything is bearish right now, the way that I would know for sure if I have not lost my $400 yet, the way I know I'm going to get out of the trade and switch positions or just simply close the position is if everything is back up over the 200 moving average. If everything goes back up over the 200 moving average on all time charts, then I know that I can't go short anymore. So why am I in the position? On the 60-minute chart, price is going to have to get back up over these moving averages, the 20 and the 50. It's down in the danger zone here, and this means it's pretty shortable for sure. So all the signs are telling us we could probably use our intraday swing trade here and try to capture small profits throughout the day with a maximum limit of $400. Let's see how that works. All right, the opening bell, let's see what happens. I'm on break even already. I'm just going to see if it does a nice run down. That'd be great. But, I'm tempted to take the profits right now while it's here, and it's quite possible I will. I'm looking for it to go down to the next liquidity level, though, and I hope that it does. I'm already on break even. I just hope it doesn't come out and stop me out so quickly. That sucks when that happens. It might test this pivot level right here and go back down. Looks like it did. So I could probably put my stop right there. Now, if it comes back up, I'll make at least something on it. Unfortunately,
Order filled.
yeah, it stopped me out. Well, that's what I'm saying. If I can take some profits here and there, 40 here and there, 20 here and there, keep adding it up, that'll give me some cushion on the $400, limit. I'm thinking about getting back in this thing.
Order filled.
Yeah, let's get back in it because I don't think it's done going down. I really don't. So let's get ready to put our stop back in there, and I'll let you know how the trade goes. All right, looks like the trade's going down in our favor. It's just I might just let it hit that target and be happy about that, or put in a buy stop
Order
up here,
submitted.
at least up here somewhere near break even, in case it comes back up, or I could just let it keep running. Let's try to let it keep running. You know, the thing about putting it on break even is just I hate when it comes up and stops me out when I could have made some profit on it, you know. But it's just the way it goes, you know. Hopefully it'll come down to this next liquidity level down here, and we're looking at a potential push down to the 200 moving average right here. Let's see if it gets down. Let's see if it gets down to the 200 here. I'm not trying to get greedy, but at the same time, you got to let it run. You know, when things run, they run, and you got to let them run. It's one thing I'm trying to get better at this year is let my winners run. Okay, let those winners run. We got another liquidity level right down here. I'm just going to keep it on these pivot levels. I'm going to keep it above the 20 EMA in case it's going to stay below the 20 EMA. And if it comes up here and gets me, if it stays below the 20 EMA, I'm going to be all right. All right, now I'm going to put it on that pivot right there. I have a feeling I'm testing and getting close with it. Look how it's acting. Oh, come on, stay down there. Stay down there, stay down there, stay down there. Stay under that 20 EMA. I'm going to try to let it run. I really am. I really am. Let's see if we can get it down to that 200 EMA on the 60-minute chart. That's our target. That's our goal. And I'm going to just trail it on the 20 EMA on the 1000 tick or 1 minute chart if you like, and let it stop me out if it comes back, you know, up that high. So we'll see. Or I could just close it right now and be happy with whatever we got. 54 bucks, 60 bucks. A lot of times when I do that, it keeps right on going. So I think I'm just going to try to hold it. It's almost there. It's almost at the 200 EMA. I think I'm going to close it.
Order filled.
I'm going to close it because it practically got there. Still something I need to look at. It's going to keep going. Still something I need to work on. But there's a lot of freedom in seeing things jump around and move around when you already have your plan in place. So it was exciting to see that I didn't care if it came up and into this area because it didn't hit my maximum stop loss. I already got my maximum stop loss in place. My mind, $400 is all I'm going to lose on this trade. And as long as it stays under that, I am willing to stay in the trade. And that's what's great about the strategy is you don't have to get in and out and in it. I mean, you don't have to worry about the stop loss too much. Just don't let it go past your maximum limit for the day. Well, it's a good thing I got out when I did. It would already be back up to where I had entered in, and I'll probably be break even on that trade. No, I was trailing it. I remember now, I was trailing it. Okay, let's take a look at what we're doing. That's a big old pintail off the 200 moving average on the 60-minute chart. So if it's the bottom for the day, it doesn't mean it's not going to come back down and test. It doesn't mean it's going to go back up over these moving averages, which is once it's over the top of the 20 and 50 on the hourly chart, the 20 and 50 EMAs, once it gets over the top of those, like over here, I don't try to short. I'm looking for longs. And it's a sell signal, but it's not a strong sell signal because it's not below the 200. Okay, so we have to keep all that in mind when we're trading. Take profits when you get them. Don't get greedy, and keep an eye on the position of all the moving averages on all the time charts because you never know when it's going to switch directions. You really don't. And you never know when it's going to give you another opportunity to short again. So technically, I'm going to keep an eye on this. This is a strong move up here, but I'm looking for a trend line break to the downside now, which would be a trend line moving average strategy and not a intraday swing strategy. So I'm using two strategies on this today. So we're going to be watching the trend line breaks. It broke the trend line here, but it didn't really look good on the 2000 tick chart. This is what I try to tell you. Be careful, 'cause as soon as it broke that 2,000 tick chart, it just immediately started going back up. And unfortunately, it went up so quickly that it kept me from trading. So that was good. It's hitting the 20 EMA on the 10,000 tick and the 200 EMA on the 1,000 tick. Now this could be an interesting area for an attempt to sell it back down. We'll have to see how everything looks here, and I'll let you know. Well, one thing I do know is that that's a nice strong bounce off the 200 EMA. So, if it didn't do that right there, and it sort of just chopped around near the 200, I would be more, susceptible to catching a short. But look at this move up, and I'm still looking for a trend line break. I'm learning as I go. And we have to also remember that, we are in a daily bull market. So it's above the 20 EMA. Everything's going up on the moving averages. The momentum is still strong to the upside. It could do a reversal in the middle of the day like it did here. Look like it's coming down and then go right back up. It can do that. And we have to be careful and aware of that at any time, that it can look like it's going down and come right back up. And so I'm looking at all the days here. I'm looking at, the things that it's done in the past. And like this day right here, going down, you would think, okay, it's going to go down the 50 EMA on this. No, it came right back up and closed green, right? This could go right up and close green. We have to be aware of that. We can't be too married to our buy it. We have to keep an eye on the moving averages. This is going to keep us out of trouble. Even if we get caught on the wrong side, even if we go short and it ends up turning bullish on us, there's a point where we have to get out. And that point is clearly understood. When price is above all these moving averages, we don't go short anymore. We're not trying to find trend line breaks to the downside, right? So right now, price is pulled back to the caution zone to a white line, which is a daily level. Could be the daily high or the daily low. Looks like it's the daily low on the daily chart. Yep, let's look at it. Here's the yesterday or the previous day. It could be coming right back up into the bottom of the previous day. I'd like to see how it reacts in that area. If it rejects and stays down, that's going to be a great sign to keep shorting. So I probably need to wait until I see that activity. Right now, it's looking like it wants to break the trend line on the 1,000 tick. It looks like it's trying to break. It's tested up here. I could keep my stop loss very, very tight right here.
Order filled.
I could keep it very tight right here and see what happens.
Order submitted.
Buy stop right there. I'm going to try it. This is a trend line break.
Order submitted.
It's a trend line break. Let's see if it stays on this side of the trend line. Coming back down, it might want to go up to that previous day high up there, and then reject, or it just may keep going. This may stop me out, but I got to give it a try. It looks like it could consolidate and just keep right on going. I've seen this pattern before, and it doesn't look good for the bears. Right here, this little consolidation above the 50 EMA, and it could easily just try to head right up to that previous day's low. At least that's the next target for it anyway. And so I'll just get stopped out on this. Got to show my losses and my wins to be transparent with everybody. Now, looks like that's where it's going, no doubt about it. And I'll just let it play out.
Order filled.
All right, stopped out of that trade. Let's mark it right there. Fourth trade for the day. And so it did not work.
Order
Cancel all
canceled.
the other orders. All right, so yeah, it didn't work. I'm going to be careful about shorting it now because I don't want to give back all my profits. That would not be good. All right, this is a good lesson for me. I'm so tempted to revenge trade. It does look like it's reversing and falling back down. And boy, don't we hate when we get ticked out by one tick before it goes in our favor. It's just, it's annoying, but it's part of trading. And that can trigger us into revenge trading and then getting back in a trade. And then it still stops you out a second time. Look at the activity and the behavior of this. This is an unreliable price action. So I'm not going to revenge trade. And I'm not going to take this particular trade. I'm going to let it get through this area before I do anything. Because these pintails look like they want to go back down, but it's right at the 50 EMA, and it's already stopped me out once. So I'm just gonna observe it right now. I don't know what to do, and if I don't know what to do and I'm not confident in it, then don't take a trade. Okay, I realized I can do a different strategy here.
Order filled.
I don't have to do a trend line break strategy, which requires a certain area of my stop loss. With this intraday swing, I can let it move around. And so I'm going to switch strategies now. I'm not going to go with the trend line break strategy where I have to have a certain area for my stop loss. So this is a different strategy entry. I'm entering a different trade here, so I will let you know as it develops. Okay, it's starting to get dangerous. That's why we call it the danger zone. Let's take a look at it on the 60-minute chart here. You can see, well, it has pulled back into the danger zone, put in a strong pintail on top of the 200 moving average. This is the 60-minute chart, and it looks bullish when it's, now you're starting to feel bullish here. Here on the 15-minute chart or the 10,000 tick chart, it's pulling up into the danger zone. That's why we call it the danger. This thing could keep right on going. Like I said, once price closes above the 200 and keeps on going, we're not going to be trying to short it anymore. So if it touches the 200 or even pokes through, I'm going to still be cool with it. If it consolidates above it and puts in multiple candles that way, I think that's going to be my sign. It's already somebody, you could say, why don't you get out now? And I wouldn't argue with that necessarily. We do have our maximum loss in place, and my plan is already in place, so there's no real threat to blowing up or adding to a losing trade. Once I get to negative $400, I close the trade. If I add to the position after my maximum losses hit, that's adding to a losing trade, and we're not going to do that. I don't know, it's probably too early. I'm going to add to the position right here, hoping that it comes back. When a trade's going against you and it looks like it might continue, you basically need to get out of the trade or start planning your exit. I don't have to let this get to negative 400 before I start to get out. I don't feel comfortable with it or whatever. So you can start to try to scale in and scale out and scalp your way out, and then just close the trade if it gets to negative, it gets to your maximum loss. We have to show our losses. We have to show how we're dealing with it. We have to prove to ourselves that we're not compromising our risk management. We can't change our mind. We can't let it go beyond that. And this is very important, very important. And we have to get it all down in transparency. So what I'm doing is I'm adding to my position to bring my average price up a little bit. We're only down 94. We've already made like 70, 80. So we've got a good cushion here. But if I can add right here and let it come down and scalp out of some, I'll be giving back some of my profits, but I'll also be getting myself into a much more better situation. See what we're looking at here on the daily chart is it crossed back up over the top of the previous day's low. And like we were saying, it could easily reverse and close green and be a strong bullish day. And we have to have good risk management on this. We have to, and we have to stick to it. We can't be afraid of losing. You can't be afraid of taking a loss. You have to take their losses like a man or a woman, a grown person. I tell you what, I'm closing this out. I don't have to go to $400 to prove that this is not going good. And I'm actually kind of happy and proud, really, that I am not trying to be stubborn about this trade. It's looking very strong, too strong for me. I'm not interested in doing my trade in a strong market. We're taking a little bit of a loss today. I gave back all the profits that I made, but I'm not going to take a big hit. I'm not going to even consume my maximum loss on today. So I'm excited to see what we got here. Okay, I closed it just before the spike up. We're down about $50 or so, and not bad. Maximum loss is 400. Look like it's poking up over the 200 moving average. Anything can happen. This could be where it gets weak and reverses and comes back down. I didn't think it was going to chop up that high, and it just did. And I'm not willing to fight it. If that's what it wants to do, let it do it. And I'll take my loss. It was worth a try. It was worth a try to try to use that trade strategy today. But you don't want to use it if the market is reversing on you. Okay, it works best in a choppy sideways market, and we have plenty of opportunities to use that. The market gets sideways and choppy a lot, but when it's trending and reversing and putting in a pintail on the daily chart, coming back up over the top of the previous day's low, bouncing off the 60 moving average with a strong pintail, continuing up with strong candles, this is not ideal for shorting. So let us learn and be wise about that. So yes, we're out of that trade right now. we're looking for more opportunities. All right, hopefully this is good. We're going to try it again. It looks like it's bouncing off of the 200 moving average on the 10,000 tick chart. This is where it could chop around a lot right here, in between the previous day's low, that white line, and the moving average at the top. Now, I would say if it goes back over the top here, then I'm going to be really hurting. And if it goes back over the top of this area right here, I'm going to close the position. I'm going to use this area as my stop loss, and hopefully we'll get some profit down. Maybe it'll chop around in this area, and that's what we're planning on. It's basically a intraday swing trade strategy again. We'll see how it works. Okay, let me express my concerns. I just broke even on this trade right here. Either I'm getting scared, nervous, unsure, unconfident, something. What is the problem? What is the problem? I keep going back to this. It's above yesterday's previous high. It's put in an incredibly strong pintail, strong move off the 60-minute chart. I got to be extremely careful. It is trapped in between, in the danger zone, the 50 and the 200, which you get a lot sometimes of bouncing around, which is great for this strategy. It's a range strategy. So I need to try to sell this. So, okay. So yeah, I'm ambivalent about my idea, and kind of trying to press my understanding and what's the best move here. So I think shorting is still viable, but it's very risky. It's not the best trade setup, really. I just realized, I don't have to short. If I am thinking that there's enough support down there and enough choppiness to keep it going sideways, then why not just go long? I feel better about going long than going short. So I think that's what I needed to settle in my mind. If it's choppy, and it's possible it's going to go sideways in between these moving averages for a while, and if it does break on one side or the other, it's more likely to break to the upside, I think, because of what it's looking like on the daily chart. That daily chart's telling us a lot. If it stays above the previous day's low, in this strong pintail. Now, if I were to try to go long and do the long swing on it, and it breaks below that white line right there, then I just would have a bad day, because then I would just be wrong on all sides. So that can happen as well. Okay, we're going to go long, and we're going to do our intraday swing trading strategy to the long side until it breaks the previous day's low. So that's going to be what we're doing. I'll let you know how it goes. I mean, look at this. Look at this. All the moving averages are, it's about pushing up over the 200 moving average now anyway. This is a strong looking bullish pattern right here on the 2000 tick. It is in strong, it's a buy signal on the 5,000 tick, and as soon as it gets over the 200, that's a strong buy signal. Buy signal pinched in the 10,000 tick though, and this is where it gets a little rough, because the higher time charts are showing us mixed signals. The best we can say is it's a mixed signal. When we got a bullish pattern on the 60-minute, and it's in the danger zone, pinched in between. I think this is ideal for the swing strategy. If I can just get the right side that's more likely to bounce stronger on, I think bullish is the better choice in the matter. So let's keep working that out. Okay, what I'm doing is I'm just taking whatever little profits I can get now. This thing is so choppy. It's been falling back down in this area over and over that I'm just going to take this seventh trade win and try to get back to at least break even for the day. We're just having a little bit of loss. All right, you see what I'm saying? It's just coming right back down. Bought down here, scalp it up here. Do that a few times, hopefully. And look what it's doing at the 200 moving average on the 10,000 tick chart. Trying to go over, but it's getting stuck and squoze in between there. I'd like to try to get in, keep trading the range, be honest with you. We do have the 20 crossing up over the 50 on the 10,000 tick chart. So now we're entering into a buy signal. It's not a strong buy signal, but it is a buy signal.
Order canceled.
But it is a buy signal. So that is, we're not going to really be shorting this anymore today. Okay, I don't know when I last recorded this, but we're up to, we did trade 8. Yeah, trade 8 was, I keep scalping, buying low, selling high, buying low, selling high in trade 7. And anyway, we're just going to keep doing that. And I think it, like I said, it's looking on the longer side. So if I'm going to be wrong, I don't want to try to short on this market. Everything's above the 200, which means it's back into the getting into the bullish side. We don't want to try to short now. This is what's up about it. When it moves up and down from buy signal, sell signal to sell signal to buy signal, back and forth, that's very challenging. What do we have? We have it in the danger zone. We already know that on the 60-minute chart. It ran up into the 20 and 50, which haven't crossed yet, but they're coming down, it looks like. We know this area is a choppy area. Anything can happen in this area. So that's the big picture. The next level down for us is the 15-minute or 10,000 tick chart. And the moving averages are under almost a flat 200 moving average. So it's looking like it wants to cross. So it's got mixed signals. And when you have mixed signals, you shouldn't really be trading. It's hard to trade mixed signals, or you could find a strategy that helps, in a choppy market. That's kind of why I'm trying this strategy. It is a choppy market, but I'm used to trading my trend following strategy. That's why, I'm kind of torn. These two strategies are quite opposite. The moving average trend line strategy is completely different than the intraday swing trading strategy. And I'm trying to trade them both, and that may be a problem. So I'm entering one more trade here. I thought it was going to go long, so I entered long high. And now you got to hold tight. Hold tight. Oh, I pretty much made all that money back. I was at break even. We were down $50. We were up $70, $80, and I lost it. And so it's going to be one of those days where if I can break even today, I'll be happy. I really will. I'll be happy because this mixed signal trading, trying new strategy, that's kind of what day you can have. All right, so I'll let you know how this last trade goes. If this continues to make higher lows right here, I'm very happy about the long side. And, just look at the behavior of the candles, all the wicks that were up here. It had come back up 62% of the drop down, good Fibonacci level. And then look at all the wicks. But the fact that it just didn't roll over and continue down right here is a very telling picture. The fact that all these pintails right here didn't push it off and go down either is very telling. I thought right here, okay, this breakout is telling us it's going to go longer. But then you get this choppiness right here, and that's what's aggravating. Very aggravating. If I was just playing the trend line breaks right now, I would be doing really good. Look at this beautiful trend line break activity going on. Trend line break here, trend line break here. Bring it over here and let's see, trend line break right here. Yeah, I think I'm going to try to incorporate that into this. I mean, you really just got to be able to understand and discern the market with eyes of just great experience and practice, and it just takes a long time to get good at it. All I can say is Chop City. Now it's back up over, and the 20 never crossed under the 50 for that for that buy signal. Can you believe this price activity? Oh my goodness. I did add one down here, getting confident that it's just chopping around, and I had two, and I sold one when it popped up to break even, so I lowered my average price. So basically, if I close now, we're just break even for the day. And if on a choppy, hard to trade day, if you can break even and not lose money, I think that's still considered a win. But we'll see how it finishes. Okay, I just closed way up here. I took a chance when I added this high. I don't like to add this close together, but after the market proves to me in a way that it wants to go choppy, right in this area here, we don't know if it's going to continue up or drop right back down. But after a while, you start to see that, hey, it's probably going to stay in this area for a while. The likelihood is greater that it's going to stay sideways. So adding a little higher was fine with me. And I just want to bail, get out of the trade. And it may be going now, but this was a hard read. I'm going to tell you right now, the market was very difficult for me to read with all that choppy behavior. So I'm just glad to be out. Okay, I got back in the trade. Looks really good, guys. It looks good. All that looks good to me. I like the way it looks, but then again, we've been liking the way it looks, and it's just been changing. But let's look at the 60-minute, kind of our best guide right now. That pintail off that 200 really told the story. It just got stuck up here, which is a reasonable area. It's 50%, 60% pullback from this drop into, powerful moving averages, into a resistance block here. And so, yeah, it's going to chop around, but I'm still going to see what we can get out of this. I'd like to pull some profit out of today. My final strategy for the day is to add, because I'm fairly sure that the market's going to stay in this choppy sideways market and probably pop up a little bit. It's been trending higher highs and higher lows. So I'm thinking I want to add and take a chance and adding maybe 2 or 3 up to 5 contracts in this area, which is, if it drops, it's going to really hurt. So I'll keep my risk management under control, no more than $400, but I think I'm going to go for it. I want this to drop though. All right, I'm going to make myself stop. We won, small profit. 10 trades, guys. 10 trade. That's a lot of trades. So with commissions and everything, $17 up. I don't know what to say. Over trading probably, taking too much risk. So I have to stop. I have to stop right now.